Hey everyone, welcome back to Corporate Decoder, the place where we dig through the documents so you don't have to. Today we are cracking open a report from Blue Owl Credit Income Corp. And let me tell you, after reading this, I felt a little like I needed a financial owl to guide me through. But fear not, we will decode it together. This report basically gives us a snapshot of what Blue Owl has been up to, including details about shares they have sold and how much money they are making and distributing to their shareholders. If you are invested, planning to invest, or just curious about the world of finance, this is for you. First up, the official date of this report is February 25, 2025, so everything we are looking at is current as of around that time. Let's dive into something called unregistered sales of equity securities. In simple terms, Blue Owl sold shares of their stock, but not through the usual public channels. They did this to some feeder vehicles. Think of them as special holding groups created just to own these shares. As of early February of 2025, they sold over 3.4 million shares at a price that racked up to around $33 million. Because it was not a public offer, this was done under some exceptions in the Securities Act. It's like a financial loophole. Now on to other events, namely how Blue Owl is rewarding its shareholders. The company's board of directors has declared monthly distributions, which are like dividends. So if you own shares in February, March, and April of 2025, you would be getting a payout around the end of March, April, and May of that year. The interesting thing is that the amount you get depends on what class of shares you own. Class I shares, for example, got about 7 cents per share. Other share classes, like Class S and Class D, had a bit taken out for shareholder servicing fees, so their net payout was slightly lower. Think of these fees like charges to keep the account running. On top of the monthly payouts, there were also special distributions declared. These are similar to a bonus payout to shareholders. For all share classes, it amounted to about 3 cents per share, and it was paid in April of 2025. Let's talk about what is going on with Blue Owl's stock. They are currently offering shares to the public, aiming to sell up to $10 billion worth of stock. This is not their first time. They previously offered shares in what they call a follow-on offering and an initial offering. In addition to the public offers, they also sold some shares through that private offering we talked about earlier. Since they started these offerings, they have issued a lot of shares. It adds up to more than 1.5 billion shares for a total consideration, which is like the total money received of over $15 billion. That's a lot of money changing hands. In January 2025, Blue Owl was involved in a big deal, providing a $3.2 billion loan to support the buyout of a company called Smartsheet. Smartsheet helps companies manage projects with online services. These kinds of deals show how Blue Owl operates as a major player in the credit and investment world. At the beginning of February 2025, Blue Owl sold their shares at prices that reflected how much each share was worth at the end of January plus any sales fees. So for example, Class S shares were offered at almost $10 a share. Blue Owl, like many financial companies, uses debt to fund its operations. As of the end of January 2025, they had almost $18 billion available in credit. They had taken about $13 billion. This debt comes from different sources, including credit lines and notes, which are like IOUs they have issued. Of the $17.8 billion of total debt, most of it, around $11 billion, is in secured floating rate leverage, which means it's tied to interest rates that can change. The rest is in fixed rate leverage, so those payments stay the same. Finally, let's look at what Blue Owl invests in. As of January 2025, they had investments in over 300 companies with a total value of $26 billion. Most of their investments are in the form of first lien debt, which is a safer type of loan. They also invest in other types of debt, equity, and joint ventures.